Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about AUD USD. Now, why do I want to speak about it? Because at the moment we do have quite interesting price action and structure, and it's definitely time for an update. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical side of this market. Then we will move to the order flow. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which has in fact broken above a quite strong level of structure. In fact, if we look closely, we can see how this area, if especially we extend it to the left, was acting as resistance here, support here, support here, support here. The market then broke it to the downside. At that point, started acting as resistance. And at the moment, we are testing this area as resistance once again. And in fact, the market has started a short-term move to the downside. However, if we look closer, we can see how the last movement that the market created when it made this move to the downside, correction, break below, break back above, actually has created new structure, which is this level here, which is now previous support, which is now once again acting as support here. There is also the possibility for the market to create an inverted head and shoulders. In fact, when you have impulse, correction, lower low and equal high, like in this case, you expect a correction before then the continuation higher, essentially for the creation of an inverted head and shoulders with the left shoulder here, head here, and right shoulder here. So in a situation like this, what we could expect is a correction lower before then getting a potential reversal to the upside. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, it is quite clear how the market went all the way down and tested exactly the previous weekly resistance, which is now turned support here. Now, as we're testing this previous resistance turn support, we could expect a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. We can also notice how, since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how we just had a perfect retracement to the zone which is in between the 50% and 0.618 of the Fibonacci taken on the weekly impulse, which is a quite strong area of weekly support and demand, which we could in fact expect this market to reject to the upside. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, first of all, I did speak about AUD USD a couple of days ago, when the market, after the creation of this M pattern, was here, and I explained all the reasons for which from here we expected the market to create this rejection to the upside. And in fact, that is exactly what the market did. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But as the market has now created exactly the move that we wanted to see, where we could be looking for the next potential setup here. Now, in a situation like this, we must understand that from a daily perspective, all this area is previous daily support turned resistance. From here, this market could easily continue lower, okay? There is a very good probability that from here the market will reject lower. However, a rejection from here to the downside is not aligned with what we have on the monthly and weekly. And you have to remember that all the best probabilities in the market come when all time frames, all the directional time frames, are showing the same direction. And since monthly and weekly both indicate for a potential break higher, and only the daily time frame is aligned for a move lower, this move to the downside could easily happen because this is definitely very strong daily resistance. However, this will not be an interesting pair unless the market breaks above this resistance. If and only if we get the break above this resistance, everything becomes very interesting because this previous support would once again be acting as support. And if we do get the break above this previous resistance, which at that point will become support, on the retest, this is where we would have very good probabilities for a potential rejection to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the AUD, what we can see is that with the last reports, net positions have been increasing. Now, what we have to pay close attention to is the fact that when you're looking at the AUD, you're actually looking at AUD USD, because all currencies on the spot are traded against the USD. So if you're checking the data for the AUD, you're actually already checking AUD USD. And as net positions are getting increased, going from minus 51K to minus 33K, it shows that institutions are moving to the bullish side of AUD USD. So this is very good for this potential setup, because if we do get the break on the retest, this support would be a very interesting area inside of which we could see more institutional longing. So if from here the market will melt lower, there is nothing interesting. But if we get the break above this resistance on the retest, how we could be approaching this potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential reversal higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that you have the possibility to join directly from this website to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. Go and check it out at least at transparentfxtrading.com. The link is also here in the description just below this video. And looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.